morning, all. Ira Epstein, and here we are with your morning flash update. And this update is for Friday, and this is the 17th of February, 2023, just about 8:30 a.m. Central Time. The stock markets are opening. And remember, Monday you have President's Day. That doesn't mean the futures markets are all closed. Many of them will be open in electronic session, and that's where most trade anyways, until noon Chicago time. Then they'll close. Then they'll reopen in staggered manner around 5 p.m., going through the evening until they pick everything up come Tuesday again. So keep that in the back of your mind. Now, before I get too far along on everything, and I do want to bring this up, we're having our important President's Day sale right now. It will end on Monday, President's Day. 50% off on any of my research. So whether it's my morning subscriber video, whether it's the combination of that and the ETF morning subscriber video, whether it's my full research, which includes the morning future subscriber video and my twice daily written updates along with my special updates. I put one out yesterday going of all things short in the stock indices, and I feel pretty good about it this morning. But this is how they come. How do you get to it? Go to iraepstein.com under research. You can click right up here at any point if you're on your computer. Click the icon. It'll take you right there, and the prices are all set for you. Or you can call my staff. They can work with you at 866-973-2077. That icon will be up all this meeting. So, as you can see, you're down under some pressure. You got to 40.63, rallied back just recently into the 40.80 area from the early morning break. You're down pretty hard in the metals, and the reason is the dollar is staying strong. The dollar's now gone positive again for the year. It was down. Now it's come positive. The strength in the dollar weighing on the energy markets. Look at how hard they're getting hit. Look at bonds and notes. Now, I'm surprised that the grains were able to withstand it, but they're dealing with weather situations in Argentina, which are dire. But when you go to the soft commodities, a number of them are getting hit. Bitcoin giving things back. Bitcoin went from its lower Bollinger Band, if you're a follower of those, to the upper band and right back down again, getting hit. So the big question is how many rate hikes? Now, the banks are all coming out now revising again, as you would think. This data's so hot. So I think that what they've done is they've certainly baked in the March hike. Now the question is the May. Most are baking that in right now, and then they're talking one more. Now, I'm laughing at it because some are saying, yes, we'll do that. We're going to go up 3, and then the Fed will pivot back in September, go down. The only way the Fed is going to pivot down is if the economy gets in dire straits. They have to beat this genie back in. These banks have a lot of people that are much smarter than me. I have been the one, I think, right on the money. You have sticky inflation. Sticky inflation doesn't mean you have to stop at 5.25%, 5.5%. You can go to 6%. Whatever the number is going to be until it unsticks, then they will give the market a little bit of time, make sure that they're not killing the patient, then they'll start their pivot. Does that have to be in 2023? Not at all. Not at all. Why? Because labor is so strong. Now, if labor weakens, then you have to change your argument. But until then, be careful. In that vein, let me show you what happened here. Let's go over to this morning's comments and drop with me to the bottom. Richmond Federal Reserve President Barkin just spoke at 7:30. Labor market quite hot. Seems like a shortage of labor will continue. Demand ahead of supply. These are his highlights. Businesses are reluctant to release employees. Progress being made on inflation, though the demand is normalizing. Yeah, it's strong levels. Why it's strong levels? Because people that are this strongly employed have money. And when they're this strong, it's very difficult for them to not keep buying. They keep buying, you normalize, but you don't see inflation dropping dramatically. And that's the sticky point that I'm making. January import-export prices we imported a bit less inflation. That's the way I look at it. We've exported a bit more. The conference board in just a few minutes here at 9 o'clock is going to give us their leading, lagging, and coincident economic indicators. They're expected to come in down 0.3 in January compared to the prior reports down 1%. So again, not falling as much. Falling, but the rate of descent not there quite as much, and I think that again is important. So with that, I want to remind you, take advantage. You get half off, your choice. You can go on a month basis, 1 month. You can go for the year. The year is the big advantage here. Just move your cursor to the top here or go to iraepstein.com under the word research. I'll see you over the weekend with our wrap-ups on weekly charts. Look for it then. I've got some time to do it as we've got President's Day on Monday. Maybe today, not quite certain. You have a great day. Good trading to you. Happy President's Day, and I'll see you all shortly.